Today I'm going to show you my total investing and trading portfolio as a 25-year-old here in the US. Now, what I'm going to do here is I'm just going to first off show you guys that, first of all, please don't take this as financial advice. This is just how I personally manage my own investments and my own money. And this is where I basically move money that I have, whether I make it from the business or from my trading and investing, how I try to allocate it. So first thing I'll show you guys is this. Let me just be transparent. Half of my money, if not more of my money, is invested in my personal business, right? A1 Trading, we build software tools, and we have a number of people here in the office that are on paid salary. And so that is where a lot of my personal money is parked. But I don't want to focus too much on the YouTube and the software and all that sort of side today. I want to focus more on the second half, which is of course my actual trading and investing portfolio, which I would say is about roughly half of where my money is parked overall. But even within that money, it's parked in a number of different places. So today we're going to walk through step by step each one of those things. So now what we're looking at here is my overall investment portfolio. And if we take a look, you can see that it's sort of spread out across a couple different key categories. The biggest one, of course, is my long-term ETF investing. And this one's kind of like your boomer boring one. This is where I put money in long-term, like the S&P 500, the NASDAQ, the Russell, right? This is where I'm diversifying into long-term, strong equities, companies in the United States, as well as abroad. I have some companies or some investing that I do outside of the US as well. So what you guys are probably more focused on or more interested in is actually only 25%, the Forex trading and active trading that I do, right? So a lot of this channel is about my active trading, which actually in the grand scheme of things is the minority of where my investing goes. I really strongly believe that it's important to diversify, because even if you have a trading strategy that's working really well at points of the year, there are other times when your trading is doing poorly and vice versa. Right now is actually a great example of when my trading is doing really, really quite well, but my investing this year has been really, really tough because the markets have pretty much crashed here in the United States, around the world as well, with inflation peaking really high and the Federal Reserve raising interest rates. It's been a tough time to buy and hold stocks. But the trading has been going really well. But there's times where that flips, where the trading doesn't do so hot, but the investing does incredible. And this is why I like to sort of put it into a pie chart and diversify where my money goes, so it's not all just parked in one basket, right? The old expression, don't put all your eggs in one basket. Okay, so of course the other components are the bonds and commodities section, which is definitely a minority. This is only about 5% of what I invest in. This is buying and holding things like gold and silver, and then long-term treasury bonds or corporate bonds here in the United States. Those constitute a small but a portion of my investing overall portfolio. Finally, this is where I buy individual stocks, about 32.5%. And I just want to say that this is all kind of just a rough estimate. This changes over time as valuations fluctuate in the stock market, etc., and how I generally will tend to allocate money, which I'll talk about a little bit in a second. So again, the individual stock component is about 32.5%. This is buying things like Tesla and Apple, which I'm going to talk about, show you more examples in a second. But all of this, like I said, is just a rough estimate. And there are times where I'm more willing to buy or invest in stocks, like right now when they're very cheap. And there's other times where I'm more willing to invest in my trading accounts, right? Or my active trading stuff in the foreign exchange, or shorter term trading, things like gold and the S&P, etc. So let's move on to, again, probably the most popular category on this channel, which is going to be my Forex and active trading component of my investment portfolio. So trading is inherently short term, but I treat it just like the rest of these categories as long-term investments. Trading, for me, I think a very common phenomenon is like, as a trader, your goal is to make your money quick and then, cash it out and go buy yourself a Lambo or whatever, right? But for me, trading truly is, it is one more stream of income that I can add to my portfolio. And it's something that I don't have a short-term outlook on, but rather a long-term outlook. My hope is to trade and invest for decades to come, knock on wood that I I make it, right? But the idea is like, it's one component of my portfolio that I still have a long-term outlook on. Everything in my portfolio, I am looking, in the long term, the big picture, to try and make money on in the end. So let's break down a little bit of the active trading that I actually do within my portfolio. So what you guys are probably most familiar with here on YouTube, or what you've seen if you've watched my channel before, is my active trading videos that I employ my strategy, the TTF strategy, which is my true trend following method. It's not some sort of super fancy, genius, model to approach the markets. It's relatively simple. I use fundamental analysis, I use technical analysis, and I try and follow trends by reacting to what the market is doing. So it does involve a mix of fundamentals, technicals, and if you've watched my videos often enough, you probably run into our tool, the Edge Finder. The Edge Finder is our team's software tool. Like I mentioned, I have a company, we build software tools for traders, as well as for brokerages and other businesses that want to sort of contract with us as well. So that's kind of what we're doing, but I also use it in my personal trading because, again, we spend so much time investing in building it and turning it into a powerful tool. By the way, the link for that is down below in the description if you want to check it out for yourself. So again, this TTF model is mostly focused on swing trading. So I am a swing trader by nature. I don't get too down into the, dirty 15-minute charts or anything like that. Like, I'm not really a day trader. I swing trade, meaning I'm trying to hold trades from anywhere from, 1 to 5 days. Just depends on what the market is doing. So now let's talk a little bit about the other strategy, which is the A and D strategy. This one is not something I show as often on YouTube. It's still something I do actively though, which is a smaller component to my active trading, but it's basically a position building approach in which what I'm looking to do is buy things that tend to go up in the long term, like for example, gold, the S&P, and bonds. And I'm looking to sort of build in and build out. This is kind of a mean reversion strategy. So for example, now when the markets are down like this, I'm actually allocating a little bit more to this sort of approach and trying to, build positions on gold, the S&P when they're low like this, and try to scale in and out. It's kind of my mean reversion strategy, if you will. So this kind of nicely complements each other because one of these is very much focused on trend following, whereas the other one is somewhat counter trend. And so what that does is it makes it so that between my trading portfolio specifically, one strategy tends to be doing pretty good at one time and the other one not so hot, and then sometimes they flip, and that allows me to actually produce a little bit smoother of an upward equity curve in my overall trading component to my investing portfolio, if that makes sense. Now, a lot of times we do get the question, which broker do you use? What do you trade with? All of that information will link down below in the description if you'd like to check out the broker. And also, if you want to download a copy of my trading strategy, I don't lock it up or put a big, huge price tag in front of it or anything like that. If you want to download my strategy, we'll put that link down below in the description as well. You just fill out that form and it'll send you a copy of my trading strategy. So check it out. So a quick little recap overall, this is my TTF strategy that I started in 2021. I started posting this publicly October 30th of 2020 on myfxbook.com. And this has basically been the lifespan of this strategy, or at least where I've started showing it publicly. And overall, it's had a pretty good run. We've seen some really good gains overall on this strategy. And you can see down here at the bottom, a total of 73.13%, which to me is really good, especially considering this year, to complement this on my investing side, it's been a lot worse, right? The stock market, long-term investing is great when it's great, but it could be really, really tough in the meantime, right? When you have the markets crashing, this year down 30% overall on the NASDAQ as of recently at the time of making this video. And I think in my own personal accounts, I think I'm down around about minus 25% this year in my investing, which of course is not ideal, but it's part of it, right? In 2020, for example, I actually had a year where I was almost able to make 100% on one of my portfolios, which I'll show you in a second what I had in there. On my individual stocks portfolio during 2020 and 2021, I was up like 100% between those 2 years, which was really good. So of course, now we're seeing a little bit of that come back with the markets absolutely tanking this year off of the inflation fear that's going on this year. So anyways, it kind of complements each other because yes, my trading is actually going quite well overall. which complements well my investing portfolio when that's down. Let's talk now about some of the individual stocks. So a lot of the gains that I've made in the financial market, truthfully, have been from buying strong companies, and there's a couple specific ones that have been attributing a lot of gains overall to my investment portfolio. So let's go through this. I've got them pulled up here. So we've got the Qs, right? So the Qs, this is basically your the NASDAQ on the S&P on the stock market. So if you're trading on the stock market, the US equity exchange, right? So I'm trading QQQ, which is the NASDAQ. I've bought and held this one recently. So that one's, you know, I've only recently picked that one up. It's down 3.3%. But here's some of the individual stocks. So I have Apple, right? I have the Spider, which is just the ETF. I have Tesla, Google, Microsoft, Disney, GLD, which is gold, right? So I mentioned I buy and hold gold longer term, right? So gold is in there. Amazon, Airbnb, Costco, which Costco is printed twice here, Home Depot, Verizon, Visa, PayPal, JP Morgan, Intuitive Surgical, and Nvidia. These are the stocks that I personally own. Now, like, please don't go buying these things just because I own them, because clearly you can see it's been a rough ride recently. Airbnb, I'm down 30% on that investment, whereas other things I'm up quite well, right? Look at this Tesla. This is, like I said, this is the one that really has contributed a massive amount of gains to the portfolio, is Tesla, as well as Google, as well as Apple. And I've held these throughout the 2020 rally into now. And there's been a lot of things that I sold back then, you know, made some profits on then. And you know, overall, this account has done quite well and is still really, really up despite this recent sell-off in the market. So we'll continue on. Now let's take a look at a little bit more on the ETF, bonds, etc. category. So this is my Robinhood account, which I do a lot of my ETF investing in, just to kind of segment my Webull account, which is this one here. Again, I use Webull and Robinhood. Those are only available to US people, I believe, at the time of making this video. So, you know, only for US people. Anyways, ETFs, bonds, etc. Let's go through this. So more SPY, I've got $36,000 more in SPY here. If we take a look at IWM and IWF, this is the Russell and the Russell Growth ETF. So this puts me at another, between the two of those, another $19,000 in those. VUG, this is actually a outside of the US ETF. So this allows me to get exposure to things like Toyota and you know, other companies, Shell, companies outside of the US that are strong companies, and maybe diversify away from just owning US companies. If we take a look at, that's VUA. This is also a growth fund here. VUG is a growth ETF as well. VEA, this is the one that is outside of the US companies. XBI, this is biotechs. You have XLF, which is financials, energy, XLY, SOXX, which is semiconductors. You have JNK, TIP. These two are probably my most boomer plays that I have in my entire portfolio. These are bonds. So this is corporate bond ETFs, which I only recently picked up. With this year, they have absolutely tanked, right? So JNK and TIP, if you pull up those charts in your trading view, you will see that the bond market has gotten devastated this year with rising interest rates for the first time in quite a while. Despite that, I've picked up a little bit. This actually, which is kind of cool, JNK and TIP, I believe it's 4 to 6% per year in payments that you'll collect from just holding this ETF. Now, of course, 4 to 6%, that's not great. But in terms of just not doing anything and holding on to this with the expectation that bonds could also rise in the future and collect the 4 to 6% in terms of a dividend or coupons from the bonds, that's pretty attractive to me. So I'm happy to buy some of that. If we take a look at gold, so I mentioned I have probably $5,000 in the other account and about $6,000 of gold in this account. This opens me up to some commodities, and then of course we have a little bit of silver, $725 worth of silver, which truthfully speaking has gotten destroyed this year. So gold I've actually bought more recently, but silver has not been my best pick. Thankfully, I only put a small amount of money in this one. So let's do a little pros and cons. I know this is a little different video than what I might usually do in terms of talking active trading, but I think this is important stuff, right? It's important to think about not just your trading exposure, but overall, like, what is your investing? What's your long-term goal? And by diversifying and adding other things than just active trading to my portfolio, I'm able to sort of diversify the overall returns. So some strong, so let's look at some pros and cons. Strong probability overall that this portfolio will do well, this overall portfolio. Now, it's not a guarantee. There's no guarantees in markets. There's a risk on every single move you make, right? Even if you go for the lowest risk in the entire world. If you buy bonds, there's risk. Clearly, look at 2022. It's been a terrible year for bonds, which are considered historically to be really low risk investments, like fixed income treasuries. Even those have been really, really hurt in the short term. But long term, I think that this portfolio will do quite well. It's very diversified. It opens me up to different exposure in different places than just the US and a lot of other things. So relatively diversified, like I said, and at trading, the cool thing too is that from just a normal investment portfolio, a lot of times people, they buy equities and they're exposed, of course, to market crashes by themselves. I offset that a little bit by trading. And this is one of my favorite things building into an investment portfolio is active trading, because despite what the markets are doing, if they're going up or down, I'm actually able to, in high volatility environments, actually do quite well. My trading has been really good despite a market crash. And that's actually been a hedge or a positive attributor to my overall portfolio, because the trading has done well despite the equity market getting destroyed, and the bond market as well. Okay, now let's go on to the negatives. Let's talk about the cons of my portfolio. Where am I weak and what is the bad side? Short term, I'm exposed to market crashes too. There's no completely avoiding this. If the market crashes, a lot of my money is in equities, right? It has been crashing, so it's already been exposed. But in the short term, right, if market crashes happen in the next year or two, right, if they continue to be terrible places, my account is going to overall go down. Despite how good my trading does, it's exposed that way. But like I said, going back to that long term, that's okay. I'm willing to accept this con for what it is. Long-term equity markets tend to do quite well as global GDP grows, and companies get more and more efficient. They should rise in the coming decades, right? Just in the short term, it could be all over the place. On top of that, cons exposed to the carry trade unwind. So this is something a little bit more advanced for the currency traders out there. But if you know the carry trade, in the currency world, this is basically buying high yielding currencies. For example, right now at the time of making this, the US is raising interest rates. That makes the dollar more attractive, and you can actually collect positive swap, rollover, or positive interest, however you'd like to call it. This term is pretty synonymous. The idea is basically if you hold something overnight, you can collect positive swap. For example, if I were to short the euro, which offers low interest rates, and buy the dollar, which offers high interest rates, I'm borrowing euros to buy dollars, and I can actually collect positive swap. Now, this is great when it works, and it actually allows me to create positive flow on Forex trading each and every day that I'm in a trade that is a positive rollover fee. And yes, I know this is a little bit advanced if you've never heard this concept. We'll link a video at the top right hand of the screen if you'd like to check out the carry trade video in depth. So if this unwinds, if we have a change in that nature, right? If interest rates like they did in 2020 start crashing to zero again, to sort of spur economies or try to get things back, this unwind could be really ugly for my Forex trading. Recently, we've seen rising interest rates. This has been really positive for my trading in Forex, but if we see the opposite, it can actually be an inverse effect. Finally, there's no real estate in my portfolio. I don't own any REITs. I guess I do by proxy by owning some of the S&P stuff, which is involved in real estate, but directly I don't own any real estate in personal assets or heavy exposure in an ETF or anything like that. This is partially by design. With recession looming and house prices becoming so incredibly unaffordable, I am looking to buy a house. I don't own a house yet. I've actually been on the sidelines for a while, and with prices just being skyrocketed and interest rates rising, I think personally, just my opinion, I'm going to sit on the sidelines and get an option to buy a house in the coming years. So I'm not in a rush. I have a nice apartment, and I'm completely fine with that. I also have my studio office that I spend most of my time in anyways, so I'm comfortable with that. So I am being patient on the real estate side, but I'd like to expose myself to real estate by buying a house at some point. And there you go. That's my overall portfolio. I hope this was helpful to you. I've just been trying to, do this. I've been kind of being organized myself, and I figured why not make a video and talk about my portfolio at large. If this was helpful to you in any way, shape, or form, make sure to hit the thumbs up button down below, subscribe to the channel if you're new, and we'll see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.